Welcome back to the channel, everyone. Today I want to ask and hopefully answer the question as to whether Fintel is actually shorting AMC. I've also done some more research into those non-regulatory halts, and I'm going to make an entirely separate video later on today because there's so much to unpack. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, if you're a bit in the dark as to what's been going on, you may have seen Trey's tweet. He said, "I didn't think I'd ever see the day when I was blocked by a data reporting company." That's what you get for asking questions, I guess. So if you didn't already know, last week Fintel was reporting short interest data at 40.34%. They then went on a bit of a Twitter rant, very similar to Citadel, saying that the photo was doctored, they never reported 40% short interest, and that it was always 18% short interest. They then subsequently went on a different rant yesterday and the day before about how Fintel is a very legitimate data provider and how they've not done anything wrong, and so on and so forth. Now Fintel have actually started blocking users that are asking questions because, I don't know, maybe they'd just rather block people than actually answer the questions. Now, trusty Dave Lau was here to jump in and say, "I assure you that Eurofin Terminal would never run from answering questions about data. It's practically why we're building it." So you might ask, why is Fintel running from the questions and blocking people instead of just answering the questions? Well, Rico's Trade says it's funny how after all of this happens, and the apes make people aware of it, that Citadel Securities and Fintel rise from the ashes and go on a 10-thread long tweet bonanza about what their company is all about and why their company is brilliant. He says it's typical worried and sweating behaviour, and he loves it. Clearly Fintel is getting very hot in their seat, similar to how Citadel Securities was the other month. But why is Fintel getting so hot and bothered about supposedly a data mishap or a bit of photoshopping? Well, Stock Crasher Joe says you shouldn't have blocked me, Fintel. Now I'm digging. Turns out Wilton Risenhoover, the creator of Fintel, is also the founder and managing partner of a hedge fund. Wilton is the founder and managing partner of Quantsoft Capital Partners, and Stock Crasher Joe asked the question, do you think their data is tainted by a conflict of interest? Do you think Fintel is reporting completely accurate and honest short interest? Or maybe they're trying to cover up the true short interest to cover their own backs? You can see from Wilton's LinkedIn that he's the founder and CEO of Fintel. He's also the founder, managing partner, and quantum machine learning engineer for Quantsoft Capital Partners. Now, he didn't retire from Quantsoft to start Fintel. He actually started Fintel in 2015 and used the money he generated from Fintel to start this hedge fund in March of 2019. Now, interestingly, Quantsoft Capital Partners sounds very, very similar to Citadel. Their description says, Quantsoft Capital Partners manages a private investment fund that invests in small cap companies in global developed markets. We use advanced machine learning techniques designed to efficiently identify market mispricings at scale. So basically they're using advanced machine learning techniques very similar to how Citadel has that advanced machine learning algorithm to prey on retail investors. The Quantsoft Capital Partners website even says we are not a high-frequency trading firm, nor do we perform statistical arbitrage. Rather, we hold a concentrated portfolio of stocks we believe to be mispriced, usually for 3 months to a year. It says our portfolio is comprised primarily of stocks we consider to be high-quality, undervalued stocks. We may employ leverage, and we may take short positions. So basically, Quantsoft Capital Partners use machine learning to take short positions for 3 months to a year. Maybe Quantsoft Capital Partners started shorting AMC in January or June and plan to be out in 3 months to a year. So a year from January 2021. Where does that take us? To January of 2022. Right round the corner or right now. So maybe Quantsoft Capital Partners started shorting AMC in January or June and are obviously currently holding a massive unrealized loss and plan to be out of their short position by the end of this month, but obviously they're holding that massive unrealized loss. And therefore, the founder and managing partner of Quantsoft Capital Partners, who is also the founder and CEO of Fintel, is reporting incorrect short data for AMC to try and convince apes to paper hand their shares and sell AMC so that he can cover at break even or a profit. Now, unfortunately, we can't see the 13F filings for Quantsoft Capital Partners. I guess they're currently under the 13F requirements, and therefore we can't see exactly what positions they're holding. But it wouldn't surprise me if they are holding short positions on AMC or are somehow affiliated with Citadel as well. Guys, if you didn't already know, Moomoo is an excellent commission-free broker. They also don't make their money from payment for order flow. Moomoo and Futu make their money from margin interest and from payment fees. And that way you can trade commission free without having to worry about your trades going through sketchy dark pools or being given to Citadel. And Moomoo has excellent technical indicators and even publishes daily short selling volume among a number of other different useful metrics. And right now you can currently get 5 free stocks valued up to $3,500 each just for signing up using the link in the description below and making your first deposit. So right now you can currently get up to nearly $17,500 in free stocks just for opening an account with Moomoo. Now I also want to talk about another founder and CEO, Vlad Tenev, and how he could potentially be ousted from Robinhood by March.
High-frequency traders that are bailing out this company, pumping them up when they were in distress because they're on both sides of the equation. That's what keeps this company going. Rather, and the payment for order flow just means that when you put in your order, it gets put on a shelf, and somebody jumps ahead. It's sort of a two-step. You could almost say it's equivalent to front running of sorts because they're going to trade on what you do before you get exercising. You're not getting the best execution. That's the problem. So it's more like the Sheriff of Nottingham. Plus, the stock was, about $85 a few months ago. Now it's, $17 a share? That's pretty poor performance.
It's definitely down from
the
IPO price, Jeff.
So as you heard from this interview, this guy believes that high-frequency traders like Citadel are bailing out Robinhood, and payment for order flow is very, very similar to front running, which is obviously an illegal practice. He also noted the Robinhood stock has fallen from $85 a share to below $20 a share, which is a massive, massive drop, and is obviously very, very poor performance from not only the stock, but the Robinhood company as well. It also wouldn't surprise me if the other board of directors believe that Vlad Tenev has done such an awful job this year after the January fiasco and the massive, massive drop in the Robinhood stock that they completely oust him from his position as CEO. I think on top of this, especially as Vlad Tenev sold so much of his stock at the very, very top after Robinhood started trading, it wouldn't surprise me if the other board of directors believe that Vlad is only in it for the money. Now I also want to touch on and talk about Evergrande. Sophia tweeted saying Evergrande was ordered to demolish 39 illegal buildings in 10 days. This is a big project and took years to build. Evergrande's shares have since been suspended. It's really, really interesting that this is being reported because only a few days ago, Bloomberg was reporting that supposedly Evergrande now had the money to start rebuilding some more projects, but magically still couldn't pay down its debt. I kind of had an inkling the whole time that article was absolutely rubbish because we know that Evergrande doesn't have any money, and if they did, they'd have to pay their employees and other bondholders, not put the money into construction. And the article says here the third phase of this project has a total of 39 buildings with a total construction area of 434,000 square meters. The planning permit obtained in violation of the law has now been revoked. And it says the company is now ordered to demolish the above-mentioned illegal buildings within 10 days. If the demolition is not completed within the time limit, the law enforcement will organise the demolition in accordance with the law. So not only does it seem like Evergrande was trying to borrow money to build some buildings and then borrow more money without ever having finished the first set of buildings, but it also seems like they were trying to build illegally without proper planning permission. On top of this, Sophia also tweeted a table showing the year-over-year sales figures for a number of large Chinese property developers. If we look in the December 2021 percentage growth year-over-year column, we can see a lot of disastrous companies like Evergrande, where sales are down 99% year on year. But not only that, there's tons of other development companies here that are down 73%, down 52%, down 68%, down another 52%, down 66%, and so on. So that's tons and tons of property development companies in China that are losing massive amounts of sales. It's not just Evergrande, but there's an entire list of companies that are now on the verge of bankruptcy or have already gone bankrupt or already defaulted. And finally, I wanted to quickly tell you about this indicator that flashed warnings in the year 2000 and 2007 and is buzzing again now. It says they don't ring a bell at the top, as the expression goes, but here's an indicator that topped in 2000 and in 2007. It has to do with margin debt. According to Ned Davies, a senior investment strategist at Ned Davies Research, falling margin debt growth from high levels triggers a sell warning. When the 15-month rate of change in margin debt falls below 48%, the market was lower 3 to 18 months later on average. We can see that over the last 50 years, this indicator has been right a large number of times. The indicator was first shown here in the 1970s before a big drop. It was shown here again in the 1980s before another big drop. It was shown here again in the year 2000 before the dot-com crash, and here again in 2007 before the recession. And it's now showing another sell signal once again, because even though margin debt is so high at the moment, margin debt right now is maxed out and institutions can't borrow anymore. And that's why margin debt growth levels have been falling from high levels, because they've maxed out their borrowing and can't borrow more, so can't sustain the current growth. And it says another warning sign is that price to earnings ratios on what the firm calls institutional grade stocks are stretched. Now, this is basically the Schiller PE ratio, which we also know, having covered it in previous videos, that ratio is very stretched. He says, I would note, however, that following any rally, a break of the December low is often a warning sign. So we will be watching the year-end rally closely, he says. We know that in December, the S&P 500 set new all-time highs. There was a bit of a dip at the start of December, just like a bit of a dip in October, and therefore if those dips in September and October are taken out, I expect a full market crash. Guys, be sure to let me know down in the comments below whether you think Fintel are actually shorting AMC. And guys, if you want to stay up to date with all of my latest stock and crypto picks, or if you just want some help with AMC and GameStop, be sure to check out the Patreon and the private Discord, linked in the description below. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.